Hello everyone, welcome to TSWFX. This is a USDCAD breakdown. We're going to do a review of last week's activity and we're going to also do a review forecast of next week's upcoming week. We're going to do a review of what we expect. So we're going to do a forecast, but first a review. So on the monthly time frame, we can see that price started uh, being reflected on the chart from the 1990s. We see where price found a high, found a low, and quite this is what a double bottom is called. You have a first rejection, second rejection. Obviously, there's a support there, so we draw a zone line with a rectangle tool. It's a zone, not line. It's a zone with a rectangle tool, which is a range of price to which the market will respect. And of course, when it's on support, it's a zone on support. We call that demand zone, and if it's resistance, we call it supply zone. However, we see price found a new high, we mark that with a horizontal array tool. Price broke that support, came all the way down to this resistance level. We draw another zone. Why? We draw the zone from the beginning of the candle, where the wick starts, to the end of the wick, the tip of the wick. And that's how we did it. So we found new low, and we draw a horizontal array tool to mark that low. If we move this out of the way, you can see the horizontal array tool. Let's undo that. We see that price found a new resistance. Whenever you have 2 points at the chart, you connect them with the trend line tool. So we had one touch here, a second touch here. Therefore, we just extend it out as a reference point for future use. We see a rejection from that resistance level. Price hit support here, rejected it, and went all the way up to break this rectangle. Pardon, the resistance level. It was very impulsive. You can see that this bullish candle on the monthly time frame is very bullish. It came all the way down to retest the support here. If we were to look even closer, we can see that this support here also coincides with this support here. So it's a strong level of support. It rejected, found new high, which is also in line with this. We know that some level of resistance is in this area. If we were to draw a rectangle tool here, we can clearly see that, of course, this would have been a level of resistance to watch. So give me a second to draw this properly. So we can see that there was a level of resistance that we could have watched, right? This has been broken. After it was broken, we found new support. We mark that support again. Same thing we're doing. Repeating the same steps over and over. Whenever you see a new support or a new high, you mark it because price, the essence of technical analysis is to assume that what price has done in the past, it will do in the future. Again, whenever support is broken, it becomes resistance. So this support was broken, it becomes resistance over here. We can see in the monthly time frame that there was a strong bullish, or should I say bearish rejection here. This wick is a sign of rejection. Whenever you see wicks, it's a sign of rejection. And this is the monthly time frame, so you know this is very strong. We're gonna go on a daily time frame and just focus on this region here, on the daily time frame. So first, weekly. On the weekly time frame, what do we see? We see price reject this resistance level, our supply zone, and it formed this bearish flag. 1, 2, 3. We got 3 touches on the resistance level. It pushed down, and of course, this support level is respected here. Again, when price respects a level, it is assumed that in the future it will respect it again, and of course, we confirm that. We see that price is moving on an uptrend. In this uptrend, we can see that price was respecting the structure. So we had 1, 2, and then we're awaiting the third touch here. But guess what? We see price made a massive move up. So here we already know that this is a sell level. We're gonna mark this in red. We already know that this is a sell level. After having this sell level hit, we see that price push even further. Why would it do that? Because this trend line needs to get retested as well. So the structure that we're seeing, we normally look for the third touch. 1, 2, 3. Remember, that's a sweet number. 1, 2, 3. So we got that third touch, and we have this resistance level here, or the supply zone that we are looking at to sell. This is called confluence. What is confluence? Multiple confirmation for either a sell or a buy. So let's go on the daily time frame. On the daily time frame, we can see that price pushed all the way down and started to consolidate. However, in its consolidation, we can see that it formed a structure here. 1, 2, 3. That third touch, again, we spoke of, push down. What do we see here? Support is broken impulsively, so that candle went right through the line. That support there is broken. Price came, retested it. When support is broken, it becomes what? Resistance. Resistance is hit, price started to move down, found a new low. We mark that with the horizontal array tool. Remember, it's the same thing we're doing over and over again. We mark that with the horizontal array tool. Price came, found a new high. Let's mark, go to the 4-hour time frame for more clarity. So after price found that new high, we can see that we mark that level, right, with the horizontal array tool. So price hit that high, came down, found support. Why is this the support level? For one, we know that this level here is a resistance level. When resistance is broken, it becomes support. So obviously price would have retested that level. However, let's see if there's a fifth level that may coincide with it or match that level as well. But sometimes we have the Fibonacci levels that may match that level as well. And what do we see? The 50% retracement level basically fits in the same region as the support level that we would have anticipated. So what does that mean? Confluence. Again, multiple confirmation. Price is rejected. We now draw this trend line. Why? 1, 2. We have two lows. Obviously, it's in an uptrend. So now that we have this higher low, we would have marked the uptrend with the trend line tool, connecting both points and anticipating the third. After rejecting, we see that price came all the way up and just would break this level. It will go above, but it wouldn't close above. What does that mean? Rejection means what? Selling or buying is taking place, but in this case, it's the sellers. So we're going to go on the hour time frame for more clarity. On the hour time frame, we can see there's a structure similar to the one on the daily time frame that I showed earlier. You can see that the resistance level is there is touch 1, 2 touch, came down to the support, third touch. What happens on the third touch? Movement in the opposite direction. Push down, continue down. This support was broken, it wasn't retested. This support was broken. However, when it was broken, what? Found new support here. When this support was formed, we are waiting on the retest. This is the retest level. Let's look on that. Let's look left. Remember, left is where you look to anticipate what's going to happen to the right, which is the future. So we see that price is respecting here, price is respecting here, price is respecting here. What does that mean? This is some level of significance. So we would have drawn this zone here and extended out. Again, confluence. Why? Because this area coincides or matches with the same trend line that is passing through here. So we have two levels of resistance here, because when support is broken, it becomes resistance, plus this support line here is broken, it becomes what? Resistance. Sell. Sell all the way down. See that price found support. Would have marked that level. Why? Because whenever it finds a new low or a new high, you mark it. Price came up, came back down. Double bottom. Buy. Double bottom is a strong, or some people call it W. It's a strong buy signal. Boom, price went up. And while you're watching, please remember to subscribe to the TSW Forex channel. Alright, so we are here. We see that there's a rising structure here. 1, 2, 3. What happens on the third touch? Movement in the opposite direction. And we see that movement happened in the opposite direction. But not only that, the third touch was also in this zone that we spoke of, to the left, as you can see here and here. It's the same zone that we spoke of that is some level of significance. What happens when you get the third touch and the same level of significance being hit? Confluence. What is confluence? Multiple confirmation. We see that price went up, boom, dropped, broke the support, came down, found new support. When it found new support, what did we do? Mark with the horizontal array tool, highlighted here in the black line, right? Price came, retest this. What is this? Support. When support is broken, it becomes what? Resistance. Push all the way down, found double bottom. Remember we talked about that W? So we would have had something like this. Price came up, test it once, reject it, then when it rejected, try again. That's the psychology of the market, and then goes up. That will form the shape of what? A W. So we got that double bottom, and not only that, we had a double bottom, but this structure, which is a bullish flag, 1, 2, 3. Then we had the third touch. We also had what? Not only the third touch, but we also had that level of double bottom. So we had third touch, double bottom. That's two confirmation thus far. And what's the third confirmation? This level of significance. We had a support. Support is broken, become resistance, and it's still no resistance here. Broken, become support, and then become support once more again. It's not broken. So three levels of confluence was there for this buy. And what will happen? We see that price push all the way up to this level. If we were to measure the amount of pips that would have happened there, we see we measure it 120 plus pips. So this is just the structure of the market, guys. What do we expect in the upcoming week? All right, we can see that this is a double top, which is also just as how you have the W for the double bottom, we have the M for the double top. So one would expect price to move down. Why? If we were to go to the 4-hour time frame as well, we would see, as a matter of fact, with the daily, let's talk on the daily time frame for this area. So on the daily time frame, which is the last day, we can see it ends as a pin. What is a pin? Rejection, showing strength of the sellers. That's one scenario, right? 4-hour time frame, we see that this is an inside bar. What is an inside bar? An inside bar is when the second candle is when you work where if you were to compare the high of this candle or the low of this candle, it will engulf the candle to the right. That is an inside bar. If it was the other way around, it would be a bearish engulfing. But in this case, this is engulfed. So this to the right is engulfed by the one on the left, and this would make an inside bar. An inside bar at resistance usually means sell, an inside bar at support usually means buy. I'll get into that in a different episode or different video as it relates to chart patterns and candlestick patterns. So let me know in the comment section if you want me to do a free Forex course here for beginners and also intermediate level traders as well. So one expectation of this market is price should respect this neckline because it's a potential inverted head and shoulder. We can talk about that chart pattern as well. Imagine somebody standing or inverted as it says. You have the left shoulder here, come back to the neckline. Head, come back to the neckline. Right shoulder breaks the neckline, and the distance from this area, which is the neckline to the head, is where the price will usually move from here. Neckline, same distance to the head. So that's one possible move. The next possible move is a head and shoulder on the daily time frame. What am I referring to? This would be the neckline to the left shoulder to the neckline, right? From the neckline to the head, from the head to the neckline. This is one possibility. And from this neckline, would have expect price to do what? Move all the way up to the right shoulder level, which would have been marked by this line. So that's another scenario that we could have on the USDCAD. I'm going to clean up the chart a bit and take away the lines. Too many lines on the chart. I don't like too many lines on the chart. So I'm just going to clear that up. All right. Let's see if there's a Fibonacci level that coincides or matches with this level. So we're going to move from this all the way up to the tip. How do we use it? The Fibonacci level from the lowest point to the highest point. So the lowest point would be here, highest point would be here. And we're going to watch and see what price do to a Fibonacci level to be rejected to continue down. There are several levels that you can turn on, but I'll turn on the one that is this 0.786. We'll talk about that in another episode as well. another video. So the 0.786 dial 0.786. Oh, my bad, I drew it wrong. It was supposed to move from this point to this point. I drew it wrong. I drew it wrong. So it's what I just 0.786 was early on, I didn't realize. So from the we already would have had this level move down. So this move down, retracement, then continue. That's the way it's supposed to be. So the direction that we want to go is down. So what would we expect is the movement down, the fib from the highest point to the lowest point, the retracement now, which would be this, and then from the retracement we'll continue down. And what do we see? We see that if we were to move this to the Fibonacci level of the 0.786, it would match the left shoulder level, practically the left shoulder level, to continue down. So this is a possibility. If we see price come here, is a possibility that even both scenarios may play out. That price may come to the right shoulder level here, come up all the way up to this level, and then continue down. This is a possibility as well. There's a lot of ways this can play out. Let's see what happens. But for now, this is a forecast for next week. Thank you very much for watching, and do enjoy your week. Do remember to subscribe in the meantime, and leave comments on what type of videos you would like to see. Thank you.